Welcome back. It's time now to take a look at the top business stories. UAE now the largest Arab contributor to the International Monetary Fund. Dubai Mercantile Exchange sets trading record for January. And we find out where the gold price is headed this year. The GCC markets ended mainly positive today, and also the UAE bourses posted gains. The DFM was nearly unchanged to close at 1,606 points. The property sector posted gains as Emaar Properties rose by over 0.25%, and Arab Tech was up over 0.5%. Emirates NBD rose 0.3%. Du rose by 1%. 94 million shares were traded, valued at 141 million dirhams. And over in the capital, the ADX rose 0.75% to close at 2,693 points. Abu Dhabi Islamic Bank was down nearly 0.75%. Alda Properties rose nearly 2.25%, while Suru Real Estate rose 0.75%. In the energy sector, Dana Gas was up 3%, while Taka fell 0.75%. Etisalat rose 1%. 91 million shares were traded, valued at 119 million dirhams. And now it's time to take a look at the GCC markets, which ended positive today. Coming up now, let's take a look at various currencies exchanged into dirhams, followed by the price of oil and a selection of commodities. And now for a detailed market analysis, we're joined by Anil Sachdev, the head of DGCX operations at ACM Middle East. Welcome to the show, Anil. Hong Kong's main stock index, the Hang Seng, fell by 1.5% today as developers declined on signs that China will act further to tackle the rising property prices within the country. How about the other Asian markets?
Hello, Linda. Hong Kong opened its financial markets today after the Chinese Lunar New Year holidays, and the Hang Seng index fell 1.5% today, which was the worst opening in the new year since 2008, when it fell 3.6% last time. Now, the fall is attributed to the concerns that Chinese policies will tighten the current property speculations, as home sales dropped about 16.5% last month, and the home prices have been increasing steadily. Although the consumer loans and short-term loans have been rising, but property prices have been jumping a lot, and the Chinese government is focusing on monetary policy tightening with respect to inflation, property prices, and other factors, where we could see the Chinese stocks could also fall when the China financial markets open on February 9th. When you look at the other markets, Asian markets, where Japan and the Asia Pacific Index were positive today because of positive payroll data from US on Friday, where unemployment dropped to 9% from expected 9.5%, although the total job additions were only 36,000. There are positive sentiments this week as US and Germany released positive economic data where consumer credit from US is expected to rise to $2.5 billion. Germany factory orders expected to be positive. And this week's industrial production from Germany also expected to be positive. We expect the Asian markets to move up, although Chinese markets when they open on 9th, and the Hang Seng could be in the negative with the tightening policy measures are having a strong hold.
Thank you, Anil. Have a good week. And now on to our top stories. The UAE is now the largest Arab contributor to the International Monetary Fund, the IMF. This comes after the 7 Emirates agreed to increase the country's share capital of the Washington-based fund. Under IMF regulations, each member country is assigned to contribute to the fund according to its size. The fund is then used to grant loans to poorer as well as financially distressed countries. The Dubai Mercantile Exchange set a new trading record in January. The trading volume for the DME's Oman crude oil future contract surged to a record total of just under 71,400 in the first month of the year. The good start into 2011 builds on the 35% increase in trading levels reported for last year and confirms the status of DME Oman as the world's largest physically delivered crude oil futures contract. Currently, over 50 companies trade on Dubai's commodities exchange. The Khalifa Fund announced that it will now help supply ideas for future entrepreneurs on top of its finance offerings. Since its launch 3 years ago, entrepreneurs applied to the Khalifa Fund to finance their own business ideas. Now the foundation will itself initiate entrepreneurship. It will launch a scheme where it posts a job vacancy for an entrepreneur to lead a certain industrial project, mainly a small-sized business. Candidates will be interviewed, and when the right person is found to head the project, that person will be provided with the necessary financing. The Khalifa Fund will display the current projects underway at the first Industrial Investment Opportunities Forum tomorrow in Abu Dhabi. By the end of last year, the Khalifa Fund had provided loans to 240 projects with a total value of 415 million dirhams. The Gulf region is set to witness a significant rise in private and public partnerships. According to PricewaterhouseCoopers, governments are looking to spread the costs and risks of infrastructure developments by looking to cooperate with private companies. The Middle East is rife with infrastructure spending, and with a whole host of projects planned in the region, the market for private-public partnerships is vast. Infrastructure projects by Dubai's Transport Authority RTA and Abu Dhabi's rail project, for instance, have already opened themselves up to the possibility of private-public partnerships. And in our fast financial news, total energy consumption grew by 5.3% in the MENA region last year. That is the second highest rate in the entire world. According to asset management company Al Masa Capital, due to this strong growth, the MENA region has to renew its focus on green energy technologies. Energies including wind, solar, nuclear power and biomass are a necessity for the region to keep pace with its vastly growing energy demand. Bank provisions for defaulted loans in the UAE rose by 36% in December compared to the same month in 2009. According to the central bank, provision increased by over 10 billion dirhams to a total of 44.3 billion. Officials have advised banks to book provisions for bad loans on a quarterly basis rather than at year-end. It's been reported that the Middle East is looking to spend 2.5 billion dirhams into Malaysian investments. The food sector, tourism and agriculture are the main areas of investment interests. Officials are said to make announcements by the end of the year. And after the break, we find out about the rising demand for gold in the region and where the price of the metal is headed.